Good morning, everybody, and this is your S&P 500 a day trade setups for today. So we got a fairly strong move going into close on Friday. You can see pretty solid daily candlestick here, and if you look at it on the weekly, we've got a inside bar bounce off. It's not quite off structure, but sorry, let me just get this in and I'll show you. So that was the inside tail. You can see we've touched it before, and we had a double week here. But moving averages are still in a bearish setup on the weekly. So we've also got those three tails to the upside here as well. So still a 50-50 call here for me on the S&P. The DAX is looking interesting, but the Dow and the S&P are not looking as interesting or as appetizing. I'm going to put in this level here. We have got above it, so obviously I'd want to see that flip into support before getting too excited. Oscillators, not quite overbought yet, but if you look at it on the 3-hour, we've got diversions from that previous swing high and this swing high to where we are now, grouped tightly to the upside, which is always a concern. So this is not an area I want to be jumping in long. So I'd want to see a pullback onto some form of structure, and we're going to pick this up on the hour. I just want to get these two levels in. So now that'll do. So that's kind of what we're looking at. We've also got a little bit of a gap just below that. You see there's the gap there, there's another gap there, there's another gap there, there's another gap there. So we've got 2 days of gaps here. Anything's possible. But we have been in a downward trend for quite a few days since 17th of February. So what we're looking for is a pullback onto structure to test the break, find support, and then we're looking for a trend to the upside. So this is my first area. That is 4029, 4019, and I can almost bet you that that's going to be 4,000 there. 39996, just a little bit higher, and that would be 399999, which will just round it off to 4,000. So 4,000 would also be a fairly decent area to look at. We also have a inverse head and shoulders here. Here's your left shoulder, here's your head, and here's your right shoulder. So just doing this, that is a 772 point target, which takes us to 4076. Just going to bring it down to 4075. So that is your target. Look there, inside tails, area that you found support in the past. So that is definitely where we are aiming for right now. Just don't want to be jumping in willy-nilly right now. So moral of the story today is quite simple. Get onto the 15-minute, watch these inside tails here. You could find support there. So you could find a situation where you have an opportunity to buy. You've got a 100-point stop loss and you're looking for 260-point gain. This is your target at the moment. That's 4075. That is the measured move. It is the next bit of structure, so that's what makes the most logical sense. At the moment, you are in a pretty strong uptrend on the 15. So, any pullback onto that, you would look for the opportunity to buy. Any pullback deeper on would also be an opportunity. You just need to make sure you see the price action before jumping in on that. So, inside bars, engulfing bars, or pin bars, off any of these levels, and as far down as 4,000. Is the key. So this is a weekly close above 4,000, not a monthly close. So I would expect this to be targeted again through the month. I don't be too surprised to see us reject one of the higher levels with a big move down, try to build a base down here, then move to the upside. With all the gaps that are here, that is something that I think is more than likely going to happen. Okay, so that's kind of my view at the moment. We are up right now, not confirmed up. So you would want to see a pullback, you want to see support found, and then you're looking for a move up. Just pay attention to this head and shoulders target, because I think that is probably going to be tagged before we see any meaningful retracement. Anyway, that's kind of my view at the moment. Hope it helps, and we will catch up with you tomorrow morning. Cheers for now.